Good afternoon and welcome back to an day review for today. And today is a Monday, December 12th. December 11, 2023. And it's the first trading day of this week. And this week we have a high impact news. And I mean the whole financial market is really looking for this meeting. And also, yes, on Tuesday, which is tomorrow, the CPI gonna release, and then FOMC. What you expect from this? I mean, huge two impact news for the huge weeks right here, very critical week. And if you look at the article that the Wall Street, it's not the Wall Street Journal, but the Business Insight, right? It's the Financial and Market Star. Basically, the headline is that the Dow Jones and the S&P hit new high for the year, which is correct, right? Because we look at the chart. Yes, that's the new high for the year. Right, our year start here, right here, 19, and then right here. The year start right here, and it make new high in January 24, and then now it broke that new high. That's amazing right there. Let's see if it keep the momentum, but it opened just around, right? The week open 459.69, and let's see what the level of this guy. Okay, so it opened above, 69.44, right? So it's open above 25, right? 25 cents above the July high, the high of the year. Before that, the high of the year set on July 24, and now it opened above that, and it continues to go up there. Let's see how it's play out. Very critical for tomorrow, Tuesday. And then Wednesday, wow, really excited to see that. I mean, from a technical indicator, we see that even though this guy is, we see the divergence, so I think it's perfect for a short setup. So watch carefully, we're gonna do a short setup right here. In terms of the weekly, you see that? The divergence right there, that's beautiful in short setup. Okay, so we wait for the divergence to take place, right? And we're gonna wait for we had to identify the entry level, and this high is a perfect for entry level if we go short right there. So put our sell stop right there and wait for that to trigger and carrying us into the trade, into the move, into the momentum right there. We already see momentum shift right there. In terms of weekly, give us some idea right there. All right, look at our favorite time frame, 1 minute time frame. So basically it's open at 459.69, and it closed for 61.97. Look at that, $2 and 32 cents. $2.32. That's very good number right there. $2.32. What is the Monday? I mean, very positive Monday right there. So it's 461 and 97, so 37 cents. Yeah, $1.32, right? No, $2.32. Different. Beautiful. What else we see? Okay, go back to the note that we have, right? The very first one trade that we are practice is a long setup. Let's see. Yeah, just a long setup right here, right? Basically, we don't have the diversion for our RSI, the best diversion, but in this case, at least it hit the oversold level, so we can go in and go long. So our entry time is 0.39 right here, right? And we exit when we expect it's gonna take out the buy side equity, and it did. Just 5 minutes later. So entry time 35, exit time 5 minutes, and we get 1 to 3 ratio right there, right? See that? Yeah, look at the swing shot. Risk right here and our reward right there. Beautiful short setup. Very simple. That's the beauty right there. You have to keep everything simple. And just not concerned much with the outcome, right? We just put in our stop loss and stay with the trade, especially very low risk right here. So if we go at a little bit early, like 33 right here, if we go 33, should stay in the trade. But it's a little bit discomfort right here. It looks like we're gonna give back, right? It's gonna break it, but it's not. That's the psychological skill that we need to practice right there, and that's the reason we do what we do right now. Just practice, our build up our psychological skills, so we can psychologists and psychological. We need that skill set right there. It takes time to build that, because when you start, it looks very scary.
Psychological.
Yeah, psychological. That's the psychological skill that we need to build. Basically, we need a mental game right there. It looks scary right there. If we psychological skill right there, psychology and psychological.
Psychological.
Psychological. Yeah, psychological. that's the first practice trade for the short, right? And here's the second short setup. But we learned a very good lesson on the second trade right here. So the second trade, we saw the little bit diversion right here. We saw it oversold, and we entry right here. We just try it, right? We know that it's gonna be early, right? We just want to test this. So the entry is at this candle. We identify there's gonna be a tether soup for breakout level. And then soon we go in, we get a stop loss hit right there. So that's the lesson learned, right? So the better entry is at 158. Let's take a look. We do exercise a helper right there, helper 2. So the better entry is when we have to wait for the diversion right there. So it make a high right here, but it make the price go up, but the RSI is going down. So basically the price make a higher high, but the RSI make a lower high right there. So the better entry for it is 58, about 5 minutes later, right? 1, 2, 3, 4, 5 minutes later, we go in 53, too early, right? So have to wait for the diversion to happen. And we go a little bit early. We have to wait for the diversion to happen. We did know that. We notify that, we're going, the RSI hits 70, that's it, that's no diversion. So in this case, we have to wait. It's a little bit different right here. Right here, we don't need the diversion because the opening, right? Opening is kind of the price to five, footstep, right? It don't know which direction to go. So we can capture that nature or that character of the price on the first 5 minutes or 10 minutes of the opening. But when you go past around 10, you know that establish the trend, and this guy the trend it go up, so we need to be careful. We cannot just go in and short right away. So we have to wait for the RSI diversion, and it did, and then pick the entry level that it's gonna break, create a fall break, and it did fall break. But the trick right here this week is stop it out. So we just get unlucky, that's it. Stop it out right there at 10.11.5. So actually the better entry is at 10.11.05 right there. So you see that 11.05 exactly right here. So we have to put our array here, separate. But where our stop loss going to be the high of this one. But if you watch the tab again, we do the recording, you see this happen real quick. So it's very, very tricky for this trade. But I'm glad that we document that, so it could be our experience right there. So this is play out very beautiful. It just rate the sell side, the buy side, and then it's going down. And our target gonna be this sell side liquidity. Sell side liquidity here, or at least right here, sell side liquidity here. And it hit that level. Look, stops at our, let's see, our initial target is where? Okay, our initial target is here, right? For 60.25. For 60.25, this level, and it hit. Yes, exactly. We need to stay in the trade right there. But more, logical level is going to be this sell side liquidity, just a little bit below there, right? 09.25. So it's 14 cent, 16 cent different right there. But it rate the buy side and then it go down, rate this sell side, and then it rate one more time sell side, and boom, it never look back. So that's 2 trade right there practice. And the last trade we practice is the beautiful trade. It's like perfect painting, right? It's like you painted a picture. You have everything in here. You have a total, you have RSI diversion, and you have a sell side liquidity rate. And this trade is the trade that we name is let the profit run. You just tell your stop loss right there. You don't need to set a target, just tell your stop loss. Because also coincident, not coincident, but yeah, you can say coincident, but it confluent with the order block photograph free test ACT concept right there. The entry is 1135, and also it coincide with another model, right? We are LIABLE, the R model. So this a last confluence, and it gives us a very high quality setup. Okay, look this, right? This how beautiful, right? So the minute we see the RSI diversion, then we start mark that anchor cable, anchor candle at entry level for the fall breakout, and wait for that break below that again. Then you put then we put in a buy stop right there. So we either enter right here, right here, right here, right here, right here. The best entry is 1136. Yeah, 36, not 35. I think we put 35 right here. I put 36. Yeah, 36 is better. Look on the 5-minute time frame. We see the beauty also. Because on the 5-minute time frame, we know from the DR model, when it close above the DR high, that means the confirmation is there, it's gonna bullish. So this is the pullback around the mid range, give a perfect entry right there. And if we use the turtle soup at our entry model, then we put in a what? We put in a buy stop right there. That's how we entry. Use the stop order is the best one. We just learned, a couple of weeks ago. That's the new knowledge that we discover. New to us, But for other professionals, it has been the technique long time. But we do our own research. Like I say, every journey, everyone have their own journey. So if we are combine the 1 minute with the 5 minutes, the R model, it gives us a perfect entry right here. It's a very big trade for us because the reward is huge. We only reach 13 cents in this case. You see that? That's the model right there. The risk reward, we only reach 13 cents. Can you believe that? And let the profits run. This trade, one of the trade that you need to let the profits run. You don't set you just move the stop loss, trailing the stop loss, and let the profits run, because there's no resistance level, right? Because it make the new high for the year, So that's the reason why there's no, making new high of the year. So technically, there's no, so-called resistance level, right? If you trade resistance spot level, or you can say another word for that is the buy side liquidity. There's no buy side liquidity there, so it's just keep going. At the end of the year, we know that, right, from seasonal tendency around October, November, and December, the market tends to go up the last quarter of the year, because the last quarter when the mutual fund and all kind of institution, I mean, all the financial institution, they get the money. They manage retirement 401k, they get the release, the money is released to them, and they have to go in and buy stock to invest. They have to invest. So that's an idea why it's going up right there. So don't try to short the market on those months. Maybe short on January or something. We wait, or maybe late December when they start they close the book and they stop buying. But right now it's very risky. But we need to monitor, right? We look at the weekly. We know that the momentum ownership, so we have to stop the level. We want to have to, time our entry for the short, otherwise we get stop out. However, if we got stop out, we still have ability to re-entry. So, but we don't want to wait too many capital right there also. So should be patient and watch. So for today, I think the key level is this one, right? 460.99, that's the key level right there. It got broke down. 49.99, right? That's the key level. Try to get the key level for every day right there. So 460.99, and today is Monday, so that's the key level. It broke that level, right? And Friday high also, that's the Friday high, 75 right there. It broke through that. You see it tests right there. 60.99. I think that's the key level. And this level also very beautiful here, 69.04. That's for the down move level right there. So it's around 460. Yep. See that? Yeah. This level. Yeah, go back to this setup. You see that when it go down here, we should see the diversion, and we mark the one that the level that make the diversion, and wait until it go below that, and we buy stop right there. You see the diversion right there. So basically, we have a lot of thing going on that setup if we have the eye to see. So we have the RSI diversion and side liquidity rated, right? When you see that diversion and wait for the sell side liquidity rated, which means wait for it to go below that level. It rated the sell side, we put in the buy stop right away, and as soon as it rate that sell side liquidity, boom, it go back up. You let me look. It never look back. That's the beauty right there. And also we see what? We see the auto block, failure gap retest. Right here, you see the huge move up here. It signals that the algo resets into the buying program. You see that? Huge failure gap, it retest one more time right here. It retest that failure gap, and it go up. And we also look on the 5 minutes, right? It's the DR model, right? DR model is have a bullish confirmation right there. So we have a, yeah, look at 5 minutes right here, right? It over and above the DR high is the confirmation right there. So just wait for the pullback, the retracement in order to go long. I'm going to reach only 13 cents. Wow, look at that. And at least conservative, you're gonna take out this sell side liquidity. Okay, excuse us, we misspoke. It should be buy side liquidity. So you have what? Conservatively, we have almost 1:9 residual ratio. No, not 1:9. I think 1:8. So 8 times 3 is 32. Yes, exactly. Yeah, conservatively, you have a 1:8 residual ratio right there. Otherwise, we let the profits run. We will have, if we let the profits run, then we have another, how much more we're gonna make? Make another, roughly another $1 right there. If we really let the profits run. So yeah, go back to this trade is you got a $1. Is that $1.20? Yeah. Is that $1? Yeah, $1.20. Which is 1:8 residual ratio. That's the beauty right there. And if we let it run, or let the profit, run right there. Profits, LBR, let the profit run. Yeah, if we let the profit run, then look at that, we got $2.09. It's gonna be how much? So let's pull our calculator real quick, but before we do a calculator, we just want to do on our head real quick, right? Just help our mind to stay sharp, right? 20, let's say, so 2 divided by 15, so it's gonna be 10. 10, more than 10, right? 15, let's say 5. I think maybe 17. Last time 17, you see. Oh, a little bit too much. So let's do the math. 16, can you with that? 1:16 residual ratio. Man. And $2.09. Look at that, it drew up beautifully. Yep. And we get the entry right here. Yeah, the perfect entry is 36, right? Oh, we say 35. I think 36. So basically entry time is 11:36 and ritual ISO is 1 to is it 1 to 8 or 1 to 16? Double that. Wow, that's right. 1, 2. Yep. Yep, that low. Yeah, we just take the screenshot and we load there for reference. Let's double check to make sure it loads right. Yes, right there. So we got it. Alright, now that I take all this out, we want to look to see. Okay, let's look some other time frame. Okay, let's look at the 1 hour time frame. We all run out of time. We go over 3 minutes, but let's patient with a little bit here. We want to take a look real quick before we wrap it up here. So you see this level is very key. As soon as it break that level, it's will break out right there. See that? It will break out. It did retest that and then it will break out. So this key 2 level we're gonna watch for this week or the following week. Whenever it break down this level, gradually and short all you can. Yeah, 460, 75, 459, 55 or 44 right there. Right, this level is 44. I think let's remove it for now. Yeah, 445 right there. You should see that. Here's our weekly right there. But we just want to project your intention that the momentum only diversion, so get it too short. The short trade it look more attractive than the long trade now, but you know we have to remain open. You never know, the market can keep going up. It can be stay overbought in a very, very long time. We should be aware of that also. But anyway, we gotta go now, and thank you for your time and interest. We always are grateful for this opportunity. Do what we love, success will come to us, effortlessly, one way or another. Bye for now.